Hey folks, it's Simon here with your Tower Daily for Monday the 31st of March 2025, end of quarter, and what a day it was. The S&P closed up 0.55%, the Nasdaq closed basically flat. I mean, it was down just a smidgen. Those numbers may not sound impressive, but considering that the S&P and Nasdaq were down over 2% shortly after the open, you can see here, big gap down on the open, sold off the first 20 minutes, and then rallied throughout the entire day, closed near its highs, and recovered from being 2% down to 0.5% higher. So big recovery, similar sort of pattern in the NASDAQ as well. Big gap down, lows were met in the first 20 minutes, and then a strong recovery into the end of the day. So does that mean this downtrend that we've been seeing is now over and it's safe to get back in the water? Look, maybe, but I would urge caution for a couple of reasons. The first one is end of quarter portfolio rebalancing. Now, I shared this chart with you a couple of days ago. This is courtesy of UBS. According to their research, pension funds had the largest amount of buying to do in stocks to rebalance their portfolios since the COVID crash. All right, so it looks like that all happened today. The second thing to bear in mind is the JP Morgan hedged equity collar expired today. Now, the long put strike in that JP Morgan hedged equity collar was at 55.65, which is just around here. So when the market opened, that collar was well in the money. By the time the market closed, that put was in the money. By the time the market closed, that put was worthless. There was about $200 million worth of premium just eviscerated. And the rally in the market would have pressured dealers, market makers to unwind hedges against that collar, all right, particularly as the S&P traded through the 55.65 strike. So dealers buying back those hedges late in the day probably pushed the market even higher, which leaves us a little bit uncertain about what to expect to tomorrow. Now, remember, we've still got the tariff deadline on Wednesday, a lot of uncertainty between now and then. And what I've drawn on this chart is just a resistance level up here. We've got a swing low there, roughly aligning with the recent swing high. And then we got some support here with these two lows. I think so long as we're between these two horizontal bands, there's probably not a lot to do. There's ample scope to get churned between these two levels, but unless we kind of break higher or break lower, getting churned, I think, is a significant risk here. In any event, I would prefer to see the market's reaction to the tariff announcements, if any, and then I'll be looking for initially a break of either this swing high or these lows, and then what we're looking for is for a clearer trend to develop or for a clearly defined range to establish itself. That's what I got for you. I hope it helps, and I will catch you tomorrow. Thank you.